If you've been waiting for Miami condo prices to cool off, the Q2 data suggests the real opportunities are happening right now. Stay tuned for more details. We closed the book on 2024 wondering, would prices finally correct, or with elections past us, would there be new opportunities for growth and momentum in the market? Fast forward to now, and with the full data from the first half of 2025 in hand, the market has been giving us lots to unpack, to say the least. I'm Sep Niakan, founder of Blackbook Properties and CondoBlackbook.com. Welcome back to your go-to source for real-time, boots-on-the-ground insight into the Miami luxury condo market. Today, I'm going to dissect all the latest numbers and uncover what they really mean for buyers, sellers, and investors trying to find clarity in an otherwise turbulent year. So let's break down what the market is showing us. Traditionally, Miami's real estate high season is in full swing between February and about April, May. But this year, that momentum stalled. We thought the presidential elections behind us that we would have a new jolt of interest. But unfortunately, the interest we got were interest rates staying high. In addition, we had condo fees generally climb, the stock market took a brief but big plunge, and political uncertainty, especially in rapid changes on the federal level, cast a shadow over major decisions like people wanted to buy a condo. Honestly, some days, especially in the first quarter of the year, it felt like the entire city was holding its breath. But by June and into July, we finally all exhaled a little bit. For starters, Q2 closed with 418 luxury condo sales, which is a 14.5% increase over Q1. But Q2 sales usually do better than Q1 anyway. So, looking at year over year, sales volumes did drop about 10%. So yes, year over year sales were still down, but we are still seeing slow but steady demand throughout the summer. The question is, was 2025's high season of sales truly denied or just delayed? I wonder if so many people who froze from all the turmoil over the first few months of the year may just be spreading their purchases throughout the year. Time will tell as the stats from Q3 eventually come out. To test my theory, I got my marketing team to look at July numbers for a temperature read, and there were 110 total sales in July over 1 million. To compare, there were 125 sales in July in 2024, and if you go back 1 year further, 109 sales in July 2023. So sales volumes did dip a little bit since last year. That doesn't really help my theory, but time will tell. What I do know is that there's a lot of pent-up demand of would-be buyers that are contacting us every day, but are taking their time, slowly trickling in and buying as they see deals out in the market. And yes, there are deals to be had. Keep watching as I explain to what extent this is happening. And for all you price hawks out there, here's where it gets interesting. The median sale price jumped to about 1.93 million in Q2, a 10% year over year increase and a 7% jump quarter over quarter. That seems bullish. And then the price per square foot year over year also increased just 3% though to 1,027 per square foot. But quarter over quarter from Q1, the median's dollar per square foot dropped 4.7% from the Q1 record high. So 3 out of our 4 price metrics increased. What that tells us is that the larger, better position units are trading, and also that the newer, more expensive product is moving in general. Newly delivered buildings like 5 Park in Miami Beach and other new construction options like Aston Martin Residences in downtown and Missoni Bahia and Edgewater are also pushing up overall market pricing stats. Newer product is more expensive. And Aria Reserve in Edgewater just launched as well. What we're seeing is that lifestyle-driven buyers are opting for long-term value and luxury, while the quick ROI and cash flow-driven investors are taking more of a back seat. That's why some newer Airbnb condo prices, especially in the mid-market and premium range, are really getting hurt in places like the Elser and the Gale in downtown, also known as Nativo. Branding nightmare. It's essentially a tale of two markets, the premium/luxury market with prices from 1 to 2 million or a little under 1 million as well, and the start of the luxury market in the low 2 millions and above. If you're hearing all of this and still wondering, is Miami overpriced? The answer is no, and maybe yes, and maybe like a short blip. Miami's matured, and we're not likely going back to sub 1,000 per square foot numbers on the whole for luxury product. Why? Well, for one, luxury real estate in cities like New York, London, and Hong Kong still far outpace Miami in price per square foot, while lacking the same tax and lifestyle incentives. When you compare it internationally, Miami still holds a massive upside. And frankly, the new luxury product that's coming out is priced well above our current price point average, so the average market prices only have one way to go, but up. But yes, sure, prices have come down, and there are still deals to be had for the upcoming months at least. If we look at apples to apples, prices of existing condos, we of course have seen dips in roughly 10%. If you have any interest in any specific building, I can run those numbers for you and show you the discounts you would be getting now as compared to last year. That way you can see the direct result of this buyer's market. And you can also see how the price dip came to be by looking at median days on market, which climbed to 94 days this quarter, up from 79 days a year ago. When properties sit, sellers get nervous, buyers get bold, and deals get made. And months of inventory have remained well above the 9 to 12 months that would be considered a balanced market, with some buildings and price points well into the teens and even 20s for months of inventory. The sales pace is just not matching the supply. And while it does reflect buyer hesitation and a slower pace, it really doesn't reflect disinterest. We know because we're doing the showings every day and see significant buyer interest in the market. They're just not pulling the trigger that fast. As my team and I put deals under contract every week, we see buyers are thinking harder. They're asking smarter questions, and they simply are looking for the best deal to pounce on. They know that in many cases they have the pick of the litter, and they're firmly in control right now, for the most part. And hence, roughly the 10% price drops we've seen year over year on existing condos, even though they don't reflect so much in these general numbers. And buyers are getting more options as more sellers enter the market. But we are seeing many owners actually taking their properties off the market as they realize they won't get the prices they want, which should help stabilize inventory as we head into 2026. So what does this mean if you're thinking about selling? As you've seen, we're still firmly in a strong buyer's market, and the pace of sales is staying steady but cool. You've got to be realistic as to market prices right now, and to put yourself in the best position possible, all the details matter. Everything matters. Since things are sitting a bit longer, you need a real strategy in terms of pricing your place to sell in the timeline you need. No willy-nilly shoot for the moon pricing unless you have something really special. And when you go to market, you need to position your property to stand out. That means strategic staging and smart marketing. You can't just throw it in the MLS and expect people to be knocking down your door to buy. Not in this market. Okay, let's zoom in on neighborhoods real quick and see where the biggest trends are happening. Fisher Island, Miami's most expensive and exclusive neighborhood, saw sales up 71% and prices per square foot up 15% year over year. This is interesting because the neighborhood represents the ultra luxury market, and that cooled last year a bit, but it's back in full force and has largely been unaffected by any of the broader market chaos. In fact, I'd argue that some of that chaos has strengthened the ultra-luxury market, which is not subject to things like interest rates and which likely benefits from the new tax laws. In South Beach, price per square foot went up 13% year over year, but median prices stayed pretty flat. Maybe the launch of Five Park had something to do with that. Maybe. On the mainland, Edgewater gained, with year over year median sales price jumping 17% to 1.6 million, making sense since the new construction Missoni Bahia sales have ramped up this year significantly, and we expect that to continue. Sunny Isles fared the worst year over year with pretty sharp drops, down 10% year over year in dollar per square foot, and down 14% year over year in median prices. That makes a lot of sense too, because we didn't have any new condo launches in Sunny Isles since 2021, and we all know that existing condo prices have dipped pretty much across the board. While in Coconut Grove, Coral Gables, Brickell, and downtown Miami all saw median sales prices jumping between 8 and 14% year over year, but mixed numbers on a dollar per square foot basis. I know we ran through the neighborhoods pretty quickly. If you want to see all of this data up close, dig into dollar square foot metrics or inventory changes, head to our blogs and quarterly reports at condoblackbook.com. All these trends reflect the truth we see every day. Buyers will pay a premium for lifestyle, convenience, and quality, but they're pulling back when it comes to older, poorly managed buildings, buildings in flux like being in construction, or investor-driven and or short-term rental products. And of course, they're looking for good opportunities. Okay, so before I said we can't isolate all this data meaningfully without considering the whole market. Let's dig deeper into the next echelon, into what is now the baseline of luxury in Miami, which is starting at about 2 million. We did see a notable surge in late Q2 activity within this sector compared to Q1, with sales volumes increasing 25%. And prices saw some moderate changes. In terms of pricing, year over year, the median sales price dropped 4.6% to 3.5 million. But year over year, the dollar per square foot increased 6.3% to 1,544 per square foot. Not bad. So what does that tell us? It tells us that the luxury market here in Miami is growing and stronger than the premium and sub 2 million market, which is feeling the pressure of domestic dynamics and chaos. It also tells us that the 2 million plus market is pulling away and seeing stronger demand. And frankly, there's more of it than before and will continue to grow as the new luxury buildings get delivered for attracting the new type of Miami buyer over the next few years. We're also seeing more and more sales in the 3 to 5 million range and the 5 million plus pricing bands as well. In fact, in Q2, the 3 million plus price band accounted for 30% of all condo sales over $1 million. And this segment is showing the strongest price increases as well so far in Q3. Also, love it or hate it, President Trump's One Big Beautiful Bill offers generous tax breaks to high net worth individuals, unlocking additional annual savings and boosting liquidity. Early projections suggest that the top 10% of households could see income gains of around 2.3% on average. We expect this increase in cash flow to accelerate both second home and primary residence purchases in Miami's and South Florida's low-tax, pro-business real estate landscape. And there are a few more major policy shifts that have happened both locally and nationally over the last few months that are likely to impact the market favorably. This year brought something quietly monumental: the second wave of reforms to Florida condo laws post-Surfside tragedy, to balance out and clarify the first set of laws that originally came out in 2022. For the first time since then, condo associations now have clearer paths to managing reserves, earning interest on capital, and stabilizing monthly fees going forward. Add to that double-digit % drops in insurance premiums across the entire commercial insurance market for condo buildings. This is a huge win. Come 2026, buyers will likely see across the board the impact of these massive savings in their monthly association fee budgets. It's important to note that insurance costs are the second biggest line item in association fees after employee salaries, which, by the way, also have stabilized. And that cost reduction and stabilization will drive confidence. In a year full of mixed signals, one thing is clear: Miami continues to climb the ranks of stable, globally respected real estate markets. While other U.S. cities are still sorting out tax headwinds, commercial downturns, and population declines, Miami continues to pull in high net worth buyers, relocating executives, and international capital. Yes, sales volumes and prices do fluctuate, but when you combine world-class lifestyle, global connectivity, favorable tax structure, and now a huge win, more predictable ownership costs, you get a city that continues to feel like a smart, long-term hold. Whether you're buying now or planning for next year, the best deals will come to those who understand the moment and the momentum. If you want to dive more into the data or get neighborhood insight, go to condoblackbook.com and check out all of our in-depth quarterly reports and sign up for weekly or monthly newsletters. As always, if you want to talk data, what's next in your life, or want to know what your home might be worth in this market, give me a call. Like, comment, subscribe, and reach out if you're looking to make your next move to Miami. Thanks for watching, and I'd like to leave you with a little song. You can cut some of this stuff out, right? Oh, wait, I missed it. Who's gonna tell you when it's time to buy? Who's gonna tell you things aren't so great? Terrible, right? Okay. So, who's gonna pay attention to your dreams? You tell him, Benjamin. Who's gonna sell your home tonight? Ba-now, ba-now, ba-now.